Hi, I'm Ravi Koka, founder of StockSnips. My background is in computer science and AI, and I have over 2 decades of experience as a serial entrepreneur building B2B platforms. After a successful exit from my prior venture, which I bootstrapped and took it to an IPO on NASDAQ, I came up with the idea that resulted in what is today StockSnips. And what I was looking at was the inefficiencies in the stock market. And what I found was that the several of the assumptions in classical finance theory were no longer valid. Basically, stock prices were not just being driven by fundamentals like revenue and earnings, but there were other factors that were driving it. I went back to my passion, which is AI and natural language processing, and I started looking at this investor sentiment phenomena, which is the rise of the retail investors and with free online trading, the 24/7 news cycle. All of that led to this very dynamic nature of the stock market. And what I came up with, my research came up with the first continuous investor sentiment signal, which captured what is being said in the news cycle, with very large volume of news that we consume, and that signal we found was, and my co-founder is a data scientist, did several studies, and including some Wall Street firms that looked at our data, we were convinced that this signal, this investor sentiment signal, was another factor that drove stock prices, especially in the short term. After validating the signal and actually trying out several models in the live markets, I saw the opportunity to actually build a platform to address the issue of active investment strategies, which were being challenged by the rise of passive investing, and a lot of money is over $50 trillion has flown into the passive markets. What we built at StockSnips now is an AI native platform. This is built on further research which we did in the last couple of years, resulting in an equities world model. And the reason you need an equities world model is just like in the physical world. Say for autonomous driving, you need a world model to understand the physics of the natural environment and laws. In the stock market is also a very, very dynamic, and you need to understand the physics of the market and how the interplay between retail investors, institutional investors, macro factor changes, all of this impact the price of an individual stock. We have built several models using this concept of an equities world model, and these have been tested in the live markets, which is key because it's not just theory. These models are actually running for over 3 years, and now we believe it's prime time because these models are able to much more rapidly adapt to the changing market regimes that, as you've seen in the last decade, whether it was COVID or the tariffs, the market patterns, dramatically change. They're non-stationary. The relationships between risk and return are non-linear. So we believe that an AI model built on an equities world model is much more able to adapt to this continuously changing environment. It's an exciting opportunity, and thank you for listening.